Bybit just froze Kaspa withdrawals with zero explanation. Whales are moving 12.7 million KAS in single transactions. Exchange balances are hitting 5-month highs while smart contracts prepare to launch. And somehow, retail investors are still sleeping on the layer 1 that's about to flip the entire crypto narrative upside down. I'm about to show you why the biggest money in crypto is positioning for Kaspa's breakout to $3, and why missing this accumulation phase could be the mistake that haunts your portfolio for years. Smash that like button if you're tired of chasing pumps after they've already happened. Subscribe for alpha that actually moves your net worth. Let's dive in. 24 hours ago, something strange happened in the Kaspa ecosystem that has the entire community buzzing. Bybit, one of the world's largest cryptocurrency exchanges, suddenly halted all Kaspa withdrawals without warning. No maintenance announcement, no scheduled upgrade, no technical explanation, just radio silence while millions of dollars worth of KAS sits locked behind exchange walls. The official response? A generic funds are safe statement that tells us absolutely nothing about when normal operations will resume. But here's where it gets interesting. While retail traders panic about frozen withdrawals, the smart money isn't selling. They're accumulating at levels we haven't seen since Kaspa's early discovery phase. This isn't coincidence, this is positioning. The timing couldn't be more suspicious. We're sitting on the edge of Kaspa's biggest technological leap forward with Kasplex smart contracts preparing for launch. Zero-knowledge proof pioneers are meeting with Kaspa's business development team. The ecosystem foundation is making moves that suggest something massive is brewing beneath the surface. Meanwhile, Tangem reports show Kaspa climbing the ranks in swap volume, proving retail demand is building momentum just as institutional money starts flowing in. The question isn't whether something big is coming for Kaspa, the question is whether you'll be positioned before the explosion happens. While everyone's distracted by exchange drama, the blockchain doesn't lie, and right now Kaspa's on-chain data is screaming one message: accumulation phase activated. In the last 24 hours, we've witnessed whale movements that would make Bitcoin maximalists jealous. Address 128 alone scooped up 12.7 million KAS in a single transaction. That's over $2 million at current prices, moved by someone who clearly knows something the rest of us are still figuring out. But that's just the beginning. The top 5 Kaspa outflows in the past day all originated from exchanges. This isn't day traders shuffling positions. This isn't retail FOMO buying the dip. This is cold, calculated accumulation by wallets that have been building positions for months. Think about the psychology here. While Bybit users are locked out of withdrawals, other exchanges are seeing massive KS movements to cold storage. Someone with serious capital is using this temporary market inefficiency to load up at suppressed prices. Gate.io just recorded 88 million KS in inflows, pushing their total holdings to the highest levels since May. That's not selling pressure building up. That's inventory management by players who understand what's coming next. The smart contracts launch isn't just another blockchain upgrade. Kasplex is about to unlock decentralized applications, DeFi protocols, and financial innovation on a layer 1 that combines Ethereum's flexibility with Bitcoin's security and Solana's speed. This is the endgame scenario crypto investors have been waiting for. A blockchain that doesn't force you to choose between decentralization, security, and scalability. And the whales? They're positioning like they know the exact date this paradigm shift goes live. But the accumulation story gets even more compelling when you zoom out and look at the institutional signals flashing across Kaspa's ecosystem. The founder of Zero Knowledge Proofs technology just sat down with Kaspa's business development lead and ecosystem foundation manager. This isn't a casual coffee meeting. This is the kind of collaboration that precedes major announcements, strategic partnerships, and technological breakthroughs that reshape entire market sectors. Zero-knowledge proofs represent the cutting edge of blockchain privacy and scalability. When the pioneer of this technology starts working directly with Kaspa's core team, it signals that something revolutionary is being built behind closed doors. Meanwhile, Tangem's swap volume data reveals that retail demand for Kaspa is accelerating. We're not just seeing whale accumulation in isolation. We're seeing coordinated demand across every segment of the market, from sophisticated institutional buyers to everyday crypto enthusiasts discovering Kaspa's potential. This dual pressure system creates the perfect storm for explosive price action. Institutional money provides the foundation, retail enthusiasm provides the momentum, and technological breakthroughs provide the fundamental justification for sustained growth. The Bybit withdrawal freeze might actually be accelerating this process. When one exchange restricts access, demand doesn't disappear. It redirects to other platforms, creating artificial scarcity that drives up acquisition costs. Smart money recognizes these temporary market inefficiencies as opportunity windows. While others panic about locked funds, professional traders are arbitraging price differences across platforms and building positions at discounted rates. Now, for the numbers that will determine whether you retire early or keep grinding the 9 to 5 for another decade. If Kaspa follows Bitcoin's second cycle trajectory from 2013 to 2017, we're looking at approximately $3 per KS by late 2027. That's not hopium. That's mathematical modeling based on adoption curves, market cap progression, and technological milestone completion. But forget about 2027 for a moment. Focus on what happens when Kaspa reaches the same market capitalization as today's top 5 cryptocurrencies. At Ethereum's current market cap, Kaspa would trade around $4.50. At BNB's market cap, we're looking at $2.20. Even matching Solana's valuation puts KS above $1.60. These aren't pie-in-the-sky projections. These are reasonable valuations for a Layer 1 blockchain that solves the trilemma without compromising on any fundamental blockchain principles. The whale accumulation we're witnessing right now suggests that institutional money is positioning for exactly this scenario. When you move 12.7 million KAS in a single transaction, you're not betting on short-term price movements. You're positioning for long-term wealth creation. Smart contracts launching this month changes everything. Suddenly, Kaspa isn't just a faster, more secure alternative to existing blockchains. It becomes a complete ecosystem capable of supporting the next generation of decentralized applications, DeFi protocols, and financial innovation. The timing alignment is almost too perfect. Exchange restrictions creating artificial scarcity, institutional accumulation reaching multi-month highs, technological breakthroughs preparing for deployment, retail demand building momentum across multiple platforms. The exchange balance dynamics tell another crucial part of this story. When we see massive inflows to platforms like Gate.io, it could signal two completely different scenarios. Scenario 1. Holders are preparing to sell, creating selling pressure that suppresses price action in the short term. Scenario 2. Institutional players are using exchanges as intermediaries for large-scale accumulation, preparing to move significant KS holdings to cold storage once positions are complete. The blockchain evidence suggests Scenario 2 is far more likely. The outflow patterns we're seeing from exchanges to private wallets indicate that the smart money isn't selling. They're consolidating. This creates a fascinating market dynamic. Exchange balances might be climbing, but available supply for retail purchase is actually decreasing as whale wallets continue expanding their holdings. When Kasplex smart contracts go live, this accumulated supply won't hit the market. It will become the foundation layer for a new DeFi ecosystem built on the most technologically advanced Layer 1 blockchain in existence. The millionaire-making potential isn't just about price appreciation, it's about being positioned in the ecosystem that becomes the backbone of next-generation decentralized finance. Think about Ethereum's early DeFi summer. Think about Solana's NFT explosion. Think about Binance Smart Chain's yield farming revolution. Now imagine all of that happening simultaneously on a blockchain that processes transactions faster than Solana, maintains security standards comparable to Bitcoin, and supports smart contract complexity rivaling Ethereum. The accumulation phase is happening right now while you're watching this video. While retail traders worry about exchange withdrawals, institutional money is positioning for the biggest Layer 1 disruption since Ethereum launched smart contracts. Kaspa represents everything the crypto space has been trying to build for over a decade. True decentralization without sacrificing speed. Military-grade security without compromising functionality. Smart contract capability without network congestion. The question isn't whether Kaspa will reach $3. The question is whether you'll be holding when it happens. If this analysis helped you understand what's really happening in the Kaspa ecosystem, smash that like button and subscribe for more alpha that positions you ahead of the crowd. Drop a comment below with your Kaspa price predictions. Are we looking at $1 by year-end, or is the smart contract launch going to accelerate this timeline even faster? The next few months will determine who becomes wealthy from this cycle and who watches from the sidelines. Make sure you're positioned accordingly. Crypto disclaimer. This content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments carry significant risk, including the potential loss of principal. Past performance does not guarantee future results. Market conditions can change rapidly, and all investments should be made based on your own research and risk tolerance. Never invest more than you can afford to lose. Consult with qualified financial professionals before making investment decisions. The views expressed are my personal opinions and may not reflect current market conditions or future performance.